Hello guys, I hope you're enjoying your Easter holiday, but now it's time to get you ready for the week ahead and prepare you for what I'm expecting to happen in the market over this week. Now, this is the last week of April, so here's what we're expecting. The last 3 weeks, we've been going to the upside and the market is going crazy. And the reason for this, we already know, is what's happening in the US. But last week was something different. So if you remember, our forecast last week was to break this buy-side liquidity, which still hasn't yet happened. Now, over this week, we've seen the market keep staying in this cycle for range. Basically, we closed with indecision candle. When we have an indecision candle on a weekly chart, this means the market has been ranging for this whole week. And of course, this is not something that's not normal for the markets. They do that especially after such movements to the upside. So my expectations are still the same as last week. I'm expecting to take out this buy-side liquidity and eventually reach out this monthly imbalance. Now, above us, we even have this balanced price range, but this is going to take some more time in order for the market to get it mitigated. So what we're going to be focusing is just this price action right here. Now again, we've got this 4-hour imbalance. Okay, so we've got this gap where the market hasn't still reached out, and we got this indecision candle. Now the first thing I'm going to be looking for is for the price to finally get out of this ranging cycle. So in order to do that, it has to break this buy-side liquidity, which is our previous weekly high. Okay, so this week here, this high of this week is our previous weekly high. And if you break this cycle, this is how it's going to look like. We're going to have a push to the upside, breaking this high. Now let's go on lower time frames and see if the market has already created something to indicate to us that is trying to break outside this range. Okay, so this is the daily chart, and so far there's nothing. So I'm probably going to move to lower time frames such as 4-hour and see if there is something more interesting. All right, so here's what we have on the 4-hour. I'm going to move this a little closer so we can see them when we go lower. Okay, so what's happening here is pretty simple, and it's actually pretty visible as well. So far, we can see these wicks right here, and what the price has done is basically take out, let's say this wick is more important because it's the closest to this price action. Let's say the market has taken out this liquidity, this is our X, and what happened after that, we've got the price breaking this high. As you know, the market moves by creating highs and lows, and when we have the market creating highs and lows and highs and lows, and then creating a higher high instead of respecting this area and creating a lower low, this is when we get a market structure shift. So instead of the market actually taking, let's say, this area as supply and push lower this area to create a new lower low, it has broken above this area by creating this market structure shift, because now we have a higher high. Okay, so we got this market structure shift. This is the indication that the market is trying to reverse the price. And again, this is our first confirmation that the market is going to continue higher instead of lower. So these areas right here now are no longer valid. They're still very important, but these areas are going to get fulfilled probably later on in the future. So now what we care about is this price action right here. Now, once we have a market structure shift, usually the price always retraces back to some area where we have imbalance or liquidity and then reverses back higher. And this is the simple reason why I'm drawing this area right here. So this is our optimal trade entry, and within this optimal trade entry is something that we have. So we have this imbalance right here, or actually we even have inverted fair value gap. So if we take this area alone, this is a fair value gap. But once we take this area here, this is where we have inverted fair value gap. And this is pretty simple. Inverted fair value gap is basically a fair value gap that has failed to hold the price. So instead of this candle right here holding the price once it reaches this area and push higher, what it did is basically it pushed down lower. So what inverted fair value gap is basically a fair value gap that has failed to hold price. So once the market moved lower, it should have retraced back to this area and then pushed the market lower again. But instead, what it did, it pushed the market higher through this fair value gap. So now this is our inverted fair value gap. So when I have this type of confirmations within my optimal trade entry, this gives this entry more power. So it's making it seem stronger, meaning it's more likely to hold the price. Okay, so I'm just gonna mark these levels. Okay, and these levels are where we can expect the price to reach back down. Here we have the price action being a little bit choppy. So what this can mean is that it's taking up momentum that's going to push the price even higher. Okay, so in my opinion, this fair value gap or this inverted fair value gap here are less likely to actually get reached in that case. So just to make sure, I'm going to increase this area up to this fair value gap because now it has more potential for the price to reach back all the way to this area and then push prices higher. However, I remember something that happened over here on lower time frame, and I want us to see it so you can understand what I'm expecting to happen. Okay, so now we're on the 1 hour time frame, and what can we see is the same price action. Basically, we've got this liquidity being swept and then price swept this liquidity as well and started reversing by creating this market structure shift. So now what happened next is that basically we've got this fair value gap right here, but above it we've got this indecision candle, which most of the time acts as demand. Okay, so I'm going to remove this just for now so you can see what I actually mean. So this demand area has held the price 1, 2, 3, 4 times. Okay, and this is the reason I'm not really expecting the price to break these levels to reach this fair value gap that we have right here and then continue higher. But what I'm expecting is for the price to actually retrace a little bit lower and then continue back higher. Okay, now here I think we had something interesting on the 50 minutes time frame. Okay, so let's see what we have here. Now our supply area is actually an Asia session, and in my experience, Asia session, such as being a supply, doesn't have the power to push prices lower. Okay, that's my opinion. That's what I've seen in the markets, and most of the time that's what happens. So that is my first indication that this area won't push the prices below this demand zone right here. Okay, now the next thing that I want us to focus on is this price movement right here. We've got this liquidity being swept, okay, and the price reversing, so basically creating a market structure shift. And then to confirm this market structure shift, we have to see the price reaching back down into an order block or basically another demand area and actually respecting this area. So here we had this indecision candle, which is the perfect example of a demand area. And as we can see, the price reached it twice and then pushed the prices higher, meaning this area has been respected and this area has been also within this demand area as well. So now I get further confirmation that this trend is already shifting from here. Okay, so what I'm going to be looking for is for the price to retrace back, reach out this optimal trade entry. However, this may change because price may actually go higher over the night, so we'll be updated tomorrow morning because so far I really can't predict where this area is going to be at. So again, what I'm expecting for the price to do is reach back lower or break these highs, break this Asia session, get a little retracement back to the downside where we will have our sessions, so basically our London session tomorrow, and hopefully this Monday we're going to get the market creating a movement to the upside, so something like this. Okay, I'm really hoping and I'm really expecting that tomorrow or this week eventually these highs to get taken out. Okay, so again, Monday I'm expecting for us to break this buy side liquidity of our previous weekly high, and over this week I'm expecting for us to break above this buy side liquidity and eventually reach out this monthly imbalance. Okay, so this is my forecast for the week ahead on Euro USD. Now if you have to compare the DXY with the Euro USD, this is what I see. So again, we have this sell side liquidity right here, which is going to get filled tomorrow morning over some time. And then we have this balanced price range right here. So eventually, even tomorrow or this week, I'm expecting for the DXY to reach this area and then start pushing the prices higher into this weekly imbalance or this daily imbalance. Now, the reason for this is because this month we've been in a very bearish market. So these imbalances and this inefficiency basically standing right above us is something that has to be fulfilled in order for the market to continue lower or continue higher. Okay, but before it reaches these areas, we have to find a strong zone from where the price is going to actually start reversing. Okay, and hopefully eventually we're going to take this daily imbalance right here. Okay, so overall this is our market breakdown for this week. It seems pretty simple. It seems actually pretty clear as well. The expectations from last week are still there, so basically the market hasn't changed much as we've been basically ranging in one cycle for 5 days. And I think this can be as well because of the holidays. Usually when we have holidays, the market is moving a little bit slower. So yeah, this is our market breakdown. Again, I'm expecting the price to go higher and break this buy side liquidity that we have on the weekly chart. So again, let's mark the week and let's end the month in green as we usually do.